Hey guys, welcome back. Welcome back to another session. Hey Ray, hey Mark, Simon. Yeah, Simon, right? Or is it Simon? Yeah, Simon, sorry. Hey Joa, Junaid, nice to see you. Hope that Pound Aussie trade is doing okay for you, Junaid. Right, just like because fan, nice to see you, man. Bleach, Andre, nice to see you. Adam, nice to see you again. Marco, Ramona, nice to see you. David, Diane, Palita, nice to see you all. I'm good today. I'm good today. I'm taking care of my neck, I guess. Right. Hey, Yan Chang, nice to see you. Nice to see you, Brendan. Howdy. Howdy. Where are you tuning in from, man? Azam from KL, nice to see you. Arjun, that's not that bad. That's not that bad. Yeah, yeah. You must know when to close your losses, right? Especially on the trade. Uh, Nice to see you guys. Yeah, thanks for tuning in, guys. Right. Varich, nice to see you. Yeah. The whiskey is good stuff, man. The whiskey is good stuff, right? The oh, sorry. Where's my slides actually? Yeah, it's good stuff, right? Jay, is your fourth webinar. Nice to see you tuning in. Right, thanks for tuning in. Yeah, Junai, please exercise proper risk management next time round. Okay, guys. Okay. Let's see. Yeah, the easy way or the hard way, man. Easy way or the hard way. Can I check who's here? Um, who's here for the first time? Weighted neck exercises. Nick, if you can send me send me what the weighted neck exercises are. I'll take a look at it. Junai, Joa, I'm pretty sure it's not your first time, right? At least your 100th time or something. Paul, yeah, this definitely seeing your name for the first time. Welcome, welcome. Right, nice to see you here, man. Nice to see you here. Kushi from Kenya, nice to see you. Jonathan, oh, first time, awesome, welcome. Welcome to the show, right? Welcome to the show. New shirt then first time, yeah. Today is I think a wadi shirt a couple of times already. Again, it's super dry, right? I think that they should sponsor me. I keep wearing super dry. Punisher shirt. I got it previously from Under Armour, right? Yeah, Punisher shirt. Yeah, end time. uh, yeah. My wife family they do. I think they distribute the super dry Asahi, right? The Asahi super dry. So, but no, I don't know or own this super dry brand. I wish I do. Hmm. Nah, someone from Kenya. I think they'll say I just saw someone in Kenya. Mumga, right? We got your friend here. We got a friend here. I just saw the name. We got a friend here, Kushi from Kenya too, right? Probably a couple of you guys from Kenya. Well, today's session, we're actually going to take a different look, right? We're going to start looking a little bit at diversification of shares, right? So this is actually one of IC Market's strong suit, right? They have a lot of shares that you can trade. And I know traditionally, oh, Fabio, welcome. Good morning, right? Dota shares, there's some gaming shares, and I'll touch on it later, right? But they shucks, what was that? Yeah, there are a lot of shares that you can trade, but not shares, but rather share CFDs. So I'll be touching a little bit today on how exactly shares are a little bit different from share CFDs. What are the advantages and disadvantages of both, right? And actually how you can start trading some of these on IC markets. It is a pretty good diversification tool. I actually did for those of you guys who keep in touch with a lot of the maybe just you have interest in shares, interest in the stock market, right? This is actually a pretty good opportunity to diversify your portfolio, right? Because when you open the world of shares, right, you got 1,600 of them on IC markets alone. A lot of them you can trade, right? And a lot more opportunities to apply a technical analysis. And of course, with shares, you can apply technical, you can apply quantitative, you can apply qualitative analysis, and this kind of stuff are good stuff, right? It's a different dimension. A lot more information about each particular share, stock rather, that you do not usually get when it comes to trading forex, right? So it's a good area to consider diversification into a lot of information. When you, some of them have a lot, some of them have absolutely nothing, right? But there are a lot of information, right? And just going to reply Stefani, right? Yeah, that the sound works. Again, I haven't created my sign yet, but yeah, sound works. Yeah, the shares only work on MT5 for IC markets currently. They have the infrastructure in place to make it to support that, so it's slightly better. Linear from South Africa. Okay, Robin, I'm glad you like the Asahi Black is not actually stout. That's the beautiful thing about it, right? It's very nice to drink. I agree. Right. So anyway, yeah, today's session on share CFDs, I encourage you guys to ask questions throughout, especially when you want to grasp this concept of CFDs, right? Especially how share CFDs are different from traditional share trading, right? The large part of it is actually the leverage that it can bring you. I'll be doing some live examples later on how this actually works out. Okay, so yeah, I know, David. They're a little bit hard to find, right? But a little bit hard to find. Just let me check something. Just let me check something. I did just let me see. Then okay, if I'm not wrong, it's a yeah, I know it's a little bit hard to find the margin requirements. But I think that if I'm not wrong, there's a way to find it directly from MT4, MT5. We should be checking later, right? But I'll be using some common examples that we can use, that I can better explain it to you with. All right. But anyway, before we begin, all right, before I begin, as usual, disclaimer, right? Disclaimer. Right, everything this webinar is educational in nature, so please do your own due diligence before you trade. Trading CFDs is dangerous, right? So nothing that is shared in this webinar should be construed as investment or trading advice. All right, guys. So again, yes, I'm pretty sure my mic is working. You guys can hear me, right? I got two people that says they can't hear me so far. Am I loud enough? Yeah, you can. Yeah. Say is loud and clear, just checked. Okay, sound works. Awesome stuff, man. Got this mic here, better work. Right. So yeah, so shares tend to have a little bit more gaps because it is closed for about 16 hours in a day, right? I mean, it's open for the 8 hours and that's closed for 16 hours, and that can cause gaps. Um, there's a style of trading when it comes to trading gaps that you can use, right? Like price tending to fill gaps, but it can also be pretty good actually if you notice that. I'll be showing you some examples later how you can apply some strategies to trading share CFDs, because the concept of gaps, gaps in the candles don't appear that much when you're trading Forex because it's just 24 hours, 5 days a week. But if you start looking at shares, there are a lot of gaps, and that opens a whole new realm of trading strategies which you can employ, right? There's sound issues there. Sound is fine. Andre, I think it works. Yeah, sound works, Just, yeah, it works. Yeah, sound works. Just checked. Um, you can you guys see my webcam now? Oh, now it's not, right? Something happened to my webcam. Where did it just turn off? Okay, just turn off, right? Weird. I can see endless. Okay, I'm just gonna plug out and plug back in my webcam. It's weird. I can see it circling, but I can't do. The most I can do is unplug and plug it in. Give me 1 second. Okay, let's see if this works. Are you guys able to see me? Awesome stuff. Awesome stuff. Yeah, I think Super Dry wrote in saying that stop wearing that shirt. All right, man. All right. Now let's go. Hey, Junite, that's mean. I'm kidding. Let's begin. Right. So today, these are some of the topics we're going to talk about, right? So mainly, firstly, what are shares? Okay, I'm going to touch really quickly what are shares, and then I'm going to talk about what are share CFDs, right? And how is it different from each other, right? And how does it really work? All right, so I'll be focusing a little bit on that with examples which I'll be giving you based on different margin requirements, right? Because I think if you have an account with IC Markets Australia, ASIC, or you have it with the offshore licenses, right? There is a different margin requirements possibly, right? I did ask their customer support. You can ask their customer support on what's the margin requirements, right? We're looking at what range of shares you can trade, particularly if IC Markets, and then of course the juicy part on strategies you can use when trading shares. Pretty intense stuff. Hopefully you can cover everything today, right? But yeah, good stuff, man. Good stuff. Now let's begin. Let us begin. All right. Anytime you hear, anytime my sound stops working, let me know, right? It just got some people saying that the sound is a little bit wonky. Feels weird because I'm pretty sure you guys can hear me really well. So yeah, anytime if the sound goes off, let me know. Oh, the sound is wonky. Um, how is the sound wonky? It's good, right? It's all good. Okay, sound is great. Okay. Okay. All right, Edmund, you're late. No worries. Welcome. Okay. Oh, okay. Sound is good. All right. All right. Yeah, maybe connection issues. Okay. Yeah. It's we got like the last chunk of us saying that sound is great. So maybe check out your speakers. It's time to change your speaker or something. All right. I can see the sound works great. Let's go. Okay, now introducing your host for today. All right, this is me, Desmond Leong. Right, so I want once again, quick introduction to me. I run the award-winning research firm Everest Fortune Group and the Forex Army, and well, finalists for 2019, 2020, and 2021 for best FX research and also best equity research. Right, so it's very useful for our it's very useful for our analysis today, right? Especially when it comes to trading stocks, right? So I can share with you some of the awesome ways, and maybe I'll take a sneak peek at what I actually the calls I made previously, right? And show you what was the call that helped us win this best equity research. Okay. Now, so we have a very strong team of CFA, CMT, and CFT accredited traders, and we regularly advise banks, brokers, and hedge funds where the markets are heading. So we have a special partnership with IC Markets where we bring you guys the institutional grade stuff, right? Education, analysis, right? Every Wednesday, tomorrow, we do a live market analysis session where I look at the markets in real time and we make real calls. If you guys got in on the Aussie dollar trade, which plummeted all the way, I hope you did because you will make good money, right? Yeah, Andre, if I have time to answer questions, I'll take a look at it, right? Yep, dividend too. I'll take a look at it, right? Okay, Brandon, nice to see that you make some money off my short gold trade yesterday. Just like you're still in. Okay, I think Aussie was bouncing up a bit, but yeah, you should have made pretty good money there, right? So anyway, if you guys want to find me on Instagram, you can follow me on Comfy Desmond. Really nothing much there, right? Just me and my cat and FIFA. One of you guys asked me to play FIFA with you guys. I haven't pinged you on it yet. Right? And you can head over to the Forex Army if you want to find my range of indicators and EAs which I built, right? Especially my trade management EA, which is very good for trade and risk management. Now let's go. Live trading session on shares. I might do that, right? Because IC Market is now sponsoring one of the reigning champions in Dota, right? Yeah, in Dota, right? So we will be looking at some shares moving forward. Okay. If you're still stuck in your short position Aussie dollar lineal, you should be happy because you're making good money, right? No Junite, there's no C trader on FX on Forex Army, right? Yeah, there's nothing on C trader. I have not looked into that yet, but we have some pretty awesome tools which in the next probably 1st of September I'll be releasing, right? Now, okay, guys, we're gonna take a quick look at what are shares, right? So, long story short, right? Shares are basically, what happens when a company decides to IPO, right? So IPO is where they go onto a stock market, right? So you have a company like company A, right? And they say, okay, it's time for us to IPO, and we're going onto the stock market. When they go onto the stock market, they get to put their shares there, right? What is the purpose of these shares? The purpose of these shares is for them to raise money, right, from the public, right? Guys like you, guys like me will go and we'll go buy the shares, right? The more shares you buy, the more money you get, and the higher the value of the shares, the higher the valuation of the company, right? So that's why many of these companies keep an eye on their stock prices, share prices, very closely. Because if it drops, they lose, lose money. If it goes up, they raise more money, right? So shares, basically, when we buy these shares, we then can trade with each other, and that's where the different exchanges come in. You have the New York Stock Exchange, we got the Nasdaq, right? These are major exchanges. We got Australian Stock Exchange, ASX. We got the different many countries have their own different stock exchange. So that's where we go in and we trade shares with each other. Okay, and the exchange actually keeps track of all the demand and supply. So that is an important thing that you need to take note of. Forex doesn't have any data on volume, doesn't have any accurate data on volume, because it's not traded through a centralized exchange, right? There's no centralized exchange. So the volume you see might be just the volume on a particular broker, right? But for shares, they trade through a centralized exchange, meaning that you actually get to look at the volume, and the volume is accurate. So strategies that require you to look at volume would work on shares, would work on the stock market, because you can see a huge influx of sellers, you can see a huge influx of buyers, right? You can see when that happens and the price doesn't move, it's a battle area, people are battling, right? There are a lot of different kind of volume strategies that you can use. Usually they don't work that accurately or that well on the forex market, but they do work pretty well on the stock market. So there's another way, another dimension that you can trade the stock market with, right? 1st September is your birthday, just like awesome. I'll try to send you a present. Okay. Let's see if you buy anything when you're selling 5 you're selling. Okay, Andre, answer that later. Okay. Now, so this is a quick overview on what exactly are shares. You're just buying a share of a company. So sometimes there might be people say stock versus shares. There tend to be some kind of confusion over it. There's no hard and fast rule. A lot of it is interchangeably, right? But if I were to try to explain this to you really simply, a stock, you could just call a stock maybe a company. It's easier to refer to a stock as a company. So I'm gonna ask like, hey, what stocks do you have in your portfolio, right? Then you say, yeah, I have Google, I have Apple, I have Tesla, I have Netflix, I have Facebook, right? So those are like the stocks, companies, right? And shares are what usually what I call shares are like the number of shares that you have in a company, right? So I could say, like the question after I ask, right? Like what stocks do you have in your portfolio? You will say, I got Google, I got Facebook, or Apple, right? Then say, oh, how much shares do you have in them, right? Then I'll say, oh yeah, I have 1,000 shares of Google, I have 1,000 shares of Facebook, I have 300 shares of Netflix, right? So shares is usually is very interchangeable, but if you really want to put a term to it, shares is more of like the quantity of that you do have of a particular stock, right? You don't usually hear people saying, oh, I got 300 stocks of Google, right? But you say, I have 300 stocks, I've got 300 shares of Google, right? So I mean, there is a lot more difference, like preferred shares, versus common shares. Oh, is it? Yeah, preferred stock versus common stock. A lot of this stuff. But in the traditional sense, when people just talk about stock and shares, when they're saying stock, kind of more or less refer to like particular company, and shares, you're more or less referring to like the quantity that you have, right? No hard and fast rule over there, right? Yeah, I got 300 chairs or tables in Google. Yeah, maybe Andre, right? So that is an idea of shares. Now, the next thing is, what are share CFDs. So you know, for IC markets, you are trading share CFDs. You're not trading shares per se, but you're trading share CFDs. So so what exactly are share CFDs? The main difference is CFDs. What's the meaning of CFD? Oh man, no, no. Oh, now okay, yeah, okay. Okay, now it works. Okay, you guys are awesome. You're like instant. You know, the moment the moment it stops working, you guys tell me, it's just great. Yeah. If not, I need to do like sign language throughout. You know what are shares? Maybe I'll do one session of sign language. I don't touch this thing, man. I just move it slightly away. um, yeah. Saida, Sandra, I'll take a look at it. Right. Okay, guys. You know, I think just to be safe, we all better take like sign language because we never know when something happens, right? Okay, now, so what are shares? Yeah, CFDs are contract for difference, right? It is what damn it is, you know, it's contract for difference. I'm not gonna write the whole thing out because my handwriting is terrible, right? Yeah, it's contract for difference. You must, you're late, man. Don't worry, forgive you, right? Yeah, it's contract for difference. Okay. Now the thing about contract for difference, if you think about it, is just the key word here is difference. Is a difference. So you're essentially only playing the difference, right? So the beautiful thing about that is that, you know, it allows you to, like, for example, if you had, let's just say you had $1,000. Okay, let's just say Netflix, right? Netflix over here, Netflix costs $500. Okay, $500, right? Sanjay, you gotta be patient, man. Okay, yeah, so it costs $500. Now you can buy 2 shares on Netflix, right? In this case, you can only buy 2 shares on Netflix, right? If you traded shares, if you traded shares, traditional shares with a capital of $1,000, you know, you can only buy 2 shares on Netflix. But if you're trading CFDs, right, and let's just say CFDs, right, you have a margin requirement of 5%. That means if you want to buy 1 share of Netflix, right, you only need to put up 5% of it. So we're going to do our calculation down here, okay? If you want to buy 1 share of Netflix, Netflix CFD, you must put up 5%, no, like 0.05, right? So if you guys do the calculation with me, right, that is $25. Okay, so to buy 1 share of Netflix CFD, right, you must put up $25. So now that you have $1,000, right, you have $1,000. Remember, you got $1,000 of capital, right? You got $1,000 of capital, right? $1,000 of capital, and you divide it by $25 per share. You can buy you can buy 40 shares, correct? You can buy 40 shares of Netflix, right? So that's the difference between This is one of the big difference between CFD and traditional shares. So traditional shares, you realize that to get the exposure to Netflix, right? With $1,000, you can probably get 2 shares. But with CFDs, $1,000, you can get 40 shares. So let's just say Netflix, right, went from 500, right, to 550, right? 500, 550. So it's a $50 increase, right? It's a $50 increase. In the case of traditional shares, you would times 2, and you made $100 over here. Okay, but in the case of CFDs, right, you have a $50 increase times 40 shares. So how much will you have made? You have made $2,000. Okay, $2,000. Of course, you have made $200,000. If you went the opposite way, yeah, you would have lost $2,000. Okay, so that's one of the key differences. One of the key things about share CFDs is that it actually, yeah, there's a large part of it which is for leverage, right? Yeah, it's for leverage, right? And CFDs, right? One of the common misconception, right? There are overnight charges for CFDs. There are overnight charges for CFDs, right? Personally, what I believe, what I see is that share CFDs tend to be pretty good if you're day trading, if you're swing trading. If you're doing super duper long-term trading, maybe not, right? It might be pretty costly, the overnight fees, but the day trades and the swing trades more, the leverage potential you can get here more than makes up for the overnight fees, right? I mean, there are importantly, dividends, right? I can see some of you guys asking about dividends. Share CFDs do benefit from dividends too, right? So the dividends, the cash amount is actually used to offset your position, right? So if there's positive dividends, it goes into crediting your position. So that's the amazing thing about share CFDs is that you get to benefit from the dividends too, right? So many people think that if you're trading CFDs, you don't get to benefit from the dividends, but in truth, you do get to benefit from the dividends, right? So important point there, right? So just let me get a sip of water. So it honestly not only helps you trade, leverage on your positions, but it also helps you benefit. It doesn't cost you to lose out on the dividends too, right? So it's share CFDs. Honestly, when you look at this example here, right, with your $1,000 capital, you can be trading 40 shares on Netflix versus 2 shares, assuming a margin requirement of 5%. I think it differs from jurisdiction to jurisdiction, right? Some of it might be a margin requirement of 20%, some of it might be a margin requirement of 5%. But in either case, it is still a lot more than what you get at brokers, not at traditional shares. Okay, now so this is one important point which I want to talk to you about. So that is that is essentially how share CFDs work, right? You will notice they actually mirror the prices of the real shares very closely, and this is where we're going to take a look at it, right? So let's take a look at in this case, right? We're going to look at Tesla. So this is IC Markets. This is IC Markets MT5 account. So this is Tesla, and it shows the price being at 706.90 currently. Okay. Now let's take a look at Tesla on the Nasdaq right now. Right. You can see that the price is 706.30. This was the last close of it. Right. Let's just look at the bars and compare them side by side. Sorry, this is the 1-day chart. I need to move this to the 1-day chart. Oh, sorry, zoom in here. Right, you notice and see. Let me see if I can put it side by side. Right, just close this off. Yeah, it's a little bit hard, but you can see that the prices followed, the real prices of the stock market super duper closely. Right, so that's a great thing. You get full exposure of trading. You get full exposure of trading while having the leverage effect, right? So you can just take a look at some things here. For example, the low point over here was 746 point maybe 80. The low point here is 746.74. I think it's 747.15. So it's, it's very, very close. The high point over here, you can see share CFDs 729.80 over here, 729.90 or 90. Very, 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 very close. Right. I mean, considering Tesla price is in the 700s. So this is really, 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 really close. Right. So that's a beautiful thing, right? Can notice there are the same gaps that you're seeing. There's a gap over here, there's a gap over here, same thing, there's a gap over here, there's a gap over here. Right. So yeah, important thing to take note of, and a lot of questions that come through. How close to the how close to the underlying does share CFDs follow? And as you can see over here, it follows super duper closely, right? Just for another sake of example, right? We're just going to take a look at Apple. All right. So Apple over here, right? Same thing. We're going to look at AAPL over here, Apple Inc. I'm not sure if I'm using the 1-day chart. I think I'm using the 1-day chart. Yeah, I think 1-day chart. Yeah, 149.70, 149.73, right? Very, very close. So Nick is asking, do we include the gaps when we draw Fibonacci points? Yes, we do. Right. So one trick, right? One trick when you're drawing Fibonacci, right? So let's just say, in this case, right, you want to see a clearer movement. One of the tricks they can do, right, if you notice there's a lot of gaps which are giving, might be a little bit tricky for you. There's one thing you can do, which is to come here and actually select, where's the thing? Heiken Aishi, right? So Heiken Aishi, kind of smooths out everything, right? So even though there are price gaps, so let's just say the 1 hour, right? So you look at here, a lot of price gaps, but once you change it to the Heiken Aishi, right, you can see that the price gaps kind of disappear, and it helps you draw, your Fibonacci's easier, right? Compared to maybe even a 30-minute chart where you're looking at all these gaps in between. Same thing, you put a Heiken Aishi, it helps you map out the structure easier, right? So it's a useful trick to use if you want to understand, you want to see how the market structure works. Okay. Now, okay, all right. Let's see. Price gaps. Price gaps. If you notice, one of the key things you will notice is that there are a lot of price gaps. So look at the price gap here. Price tends to fill the gap. So you can see the gap happened from here, and it went all the way up to here. Yeah, it went all the way up to here. So what you notice is price went all the way down to fill the gap, right? Same thing over here. There's a big gap over here. Price go all the way up to fill the gap, right? So whenever you see big price gaps, that's something. That's one of the trademarks of like the stock market, right? It tends to like to fill the price gap. You can see over here too, right? Gap over here, right? It goes up, it goes up, it goes up, and it finally comes all the way down to fill the gap before going up. Sometimes it doesn't work out like this as a gap, people think that it's going to be filled, but it's not filled over here, right? And then you're in for a tough time. So this is not a 100% method of making money, like just playing the gaps, because a lot of people have played the gaps and thinking that price will naturally fill the gaps because it's like some kind of inefficiency in the market. But if you do it wrongly, man, you can be burned really badly. Okay, so that is yes, it's like imbalance, right? That is right, just like it's an imbalance. Now, important thing to take note of, right? And I'll touch on trading strategies later. First and foremost, when it comes to the IC markets, right? What are the range of shares that you can trade, right? What are the range of shares you can trade? And to this, let you know that there's actually the ASX, the New York Stock Exchange, and the Nasdaq, right? So if you want to find the range of symbols that you can trade in the US stock market for IC markets, what you can do is go to icmarkets.com, right? Under trading, you want to click on stocks. Okay, so once you click on stocks, right, you can see when you scroll down over here, you can see the range of ASX stock CFDs, right? You can change the color if you want, and the New York Stock Exchange CFDs, along with the Nasdaq. So maybe, right, let's just say a Nasdaq, you're wondering, I wondered, is there NVIDIA? You can just type it here. I'm sorry, NVDA, right? Yeah, NVIDIA is over here. You cannot search for the name because you notice I type NVIDIA, it's not there, but I search NVDA, it appears there, right? So let's just say you want to do Tesla, Tesla stock price. So you say, okay, Tesla, all right, I want to trade Tesla, right? TSLA, same thing. You look for TSLA and you come down to here, and then you paste it in Tesla. There you go, right? There is over there. Easier way to do this, if you don't want the stock symbol, right? You just type Control F and you search for it. You don't even need to search for a ticker, right? So you can see in this case, Apple. Okay, Apple's too common. Tesla, you can see it's over there, right? Give me another one, right? Let's just say Netflix. Yep, it's over there, right? Let's look for another thing. Microsoft. Microsoft. There you go. It's all over there, right? Neo. I'm not sure if Neo is there. Oh yeah, Neo Inc is over there, right? You guys can throw out and we'll see. Throw out some of the symbols that you want to look, and we can see if it's there, right? So we got Neo over here too. Pretty cool. Pretty cool. We probably got Uber. Yeah, Uber's over here. AMC. Yeah, I'm not sure it's MCOR. Is it MCOR? I'm pretty sure it's not MCOR. Is AMC the one you're talking? Aurora. Let's try to look. Aurora. Yep, Aurora Cannabis is over here too, right? So many of your Okay, can you guys hear me now? Okay, can hear me, but can't see me, which is tragic, but it's tragic, but it's fine, right? Yeah. Don't worry if you can't see me, right? Most important thing is that you guys learn today. So, as long as you can see my screen, you can hear my voice. That is enough. To see me is the whole purpose. Thank you very much, Andre. But yeah, it's a little bit wonky today. I think the webcam for some weird reason. Um, yeah. Okay. Now, if the webcam doesn't appear, I'm just gonna try one more time. If the webcam doesn't work, we still continue. All right. Give me a second. Okay, I don't think the webcam's gonna work, right? But no problem. Yeah, no problem. Yeah, stupid webcam. All right, now anyway, let's go. Yeah, yeah, RIP man, webcam. I have no idea what the hell happened to it. Stupid webcam is so expensive too. Damn it. Right, but anyway, moving on from here, there are a lot of stocks you can trade, right? So let me show it to you, right? On IC market, it's one of the great things, right? And I want to cover this part definitely, is that strategies you can use when you're to trade shares, right? Strategies you can use when it comes to trading shares. There's a little bit more you can do, right? There's not only technical, it's not only fundamental, but there's qualitative and there's quantitative analysis. Qualitative is more like seeing the shareholders, are they good? You know, stuff that are not so much of numbers, right? But the one that you can combine pretty well. Yeah, qualitative is kind of like fundamentals, right? Quantitative is where you look a lot at the numbers, right? The financials, right? You can do calculations to see if something is you can do calculations to see if something, if a stock is undervalued or overvalued, right? What's the intrinsic value? And from there, if you have a slightly, maybe you have a swing trade, or you're holding a trade for slightly longer, that is where you can combine this with technicals, very effectively. So yeah, quantitative is of value. That's cool, man. That's cool. So let me just show you how it looks like IC markets, right? So IC markets, let's just say we're looking at Amazon, right? Amazon over here. One of the great things that you can do is that you can right click on it and you can look at fundamental data, right? Okay, wait, before I go to fundamental data, let's go specifications, right? Let me just take a look at it. There you go. All right, you can see the commissions when it comes to to trading Amazon, right? How much it costs per lot. All right, what's a swap long, swap short, the 3-day swap, volume limit. A lot of it you can find over here, right? The margin rate, the maintenance, so it's 5%, right? So in this case, 5%, which is great. So 5% means that you can essentially what you can buy in one share, one traditional share, you can buy 20 shares, right? With the same so-called, very loosely speaking, the same capital, you can get 20 times the number of shares that you can hold. Okay. Anyway, yeah. So some of the good things I like about this is that I right-click on this and I can actually see fundamental data. So if I was trading Amazon, right, one of the things that I'll do is, I will load. Okay, I'm going to load this. I'm going to load the fundamental data from Google Finance. I'm going to let's just take a look at some of it. Some of it is not that useful. Some of it is slightly more useful. Let's just look at the top few. All right. Let's just look at the top few. Reuters, and they're going to look at investing. Now, what I do look out for, right? What I do look out for, right, is let's just say I come in here, Yahoo Finance. If you know how to look at all these numbers, it's quite what's the word for it? It's a lot of numbers you can look at, right? I do like to look at this thing where yeah. So Yahoo has this thing where there are recommendations, right? Whether it's a strong buy, hold, underperform, or sell. So in this case, right, we're seeing Amazon, right? We have a lot of people who are actually recommending strong buy, right? May, June, July, August, you can see that there's a huge number of people strong buy, right? We can see that the values is almost unanimously. We are looking at a strong buy on Amazon, right? The current price is 3,002, right? The average forecast, of over 50 analysts is that the price should be in the region of 4.1. Okay, upgrades and downgrades over here. UBS upgraded to buy, right? Quite a number of them have maintain to buy, maintain to buy, right? You can look at the analyst price targets by clicking on it, right? So you get to see like the price, the forecast, the average estimate, right? This kind of information you don't get with Forex, man. You don't you're right, you don't get that much with Forex. Now, when we look at this, let me see more upgrades there. You can see everything down here. So looking at this here, right, we get a good idea that we have a lot of people forecasting that price of Amazon is thoroughly undervalued. You should be looking at the value of 4,001, right? On a month-on-month basis, people are still holding. That shows, first and foremost, that there is very strong bullish momentum. Now we come and try to put in a little bit of technicals over here, right? Because we, after all, are the masters of technical analysis. I clicked the wrong Amazon, my bad. Right? We, after all, the masters of technical analysis. We come in here, right? We look at let's just say we look at the 1 day, the 4-hour chart. The 1 day chart maybe, right? So we come here and we notice that, okay, a lot of analysts are saying that, to buy. At the same time, let's just look at the let me just look at shorter term analysis, maybe 4 hours. I'm going to put on a Heiken Aishi, see clearer market structure. What am I seeing over here if I just did an analysis, right? I already noticed that price might be breaking out of this level. It might be breaking out of a channel. It might be breaking out of a channel over here, right? So it might be dropping a little bit further. Now, let's see what else there is. There is definitely strong support over here. I'm going to change to 1 day chart so I can highlight the levels easily. Definitely strong support over here. Right, I'm going to put this as support. Strong support over there. What about this? Looks like price is coming down to a sort of overlap area over here. Sort of an overlap area. So I'm just going to put it as like a dotted kind of support to look at. Any big levels I'm looking at? Not really. Now, what I always like to do throughout indicators, look at the 50 and 200 moving average, right? We are seeing a death cross, right? So death cross has occurred. Let me look at Ichimoku cloud, right? Who the hell is changing my settings, right? It's so frustrating, right? We can see that, we're bearish. The death cross over here, which I'm showing you guys, right? I'm going to change this to black. I'm going to change this to gold, right? Change this to slightly darker. Change this to slightly darker. Let's save this as my default. Okay. Yeah. So no. Actually, still it's not a death cross, right? It looks like we almost had a death cross over here, right? But price actually didn't cross down, so we are still technically a little bit bullish. But it's dangerous to see that price has close to broke the 200 moving average. What we do, we being the people we are, right? I believe there is a natural moving average to kind of look at over here, right? And I am going to look at the natural moving average of maybe 250. Yeah, 250 probably suits it better. Yeah, but you can see how a 250 moving average, right, has caught the bounce here pretty well. Bounce one time, bounce two time, bounce three time, and price is finally breaking this level, right? So on one part, I can see that there's support, but on another part, I can see that it broke out of channel. Those of you guys who know how to use channels, right? Um, yeah, those of you guys who know how to use channels, I think you should be able to see me again. There I am. Those of you guys who know how to use channels, right? The target potential of channels is that the distance from here down to here, exit potential. We should ideally be seeing price go all the way down to here. This is the exit potential of the channel, the 100%. Okay, so price might be going down further to this level first before it bounces up, right? I mean, if we do look at, I think, closing prices, closing prices kind of suck, right? Yeah, but if we do look at a little bit of the prices around here, we can see that there could be a potential for a like some kind of support area over here. Not that great. Let me just see if I can find any other levels. I'm gonna look at weekly chart. Is there a big Fibonacci I'm missing out? Well, it's testing a big 23%, but it's not that great, right? Yeah, expansion of the channel, first time you see, right? I'm always teaching you guys new stuff, right? But basically, the expansion of the channel, it basically just takes the width of the channel. So what I'm referring to when I'm doing the 100% is that I'm actually taking the width from here to here, okay? So I Control C, Control V, right? So I paste this and I put it at the exit potential of the channel. So the price should roughly come down to this level. 100% of the width of the channel, that is what we're looking for. So make sure it's perpendicular, you draw your width correctly. Then you can see roughly what's your exit potential of your channel. The exit potential of the channel tells me it's slightly lower, right? Price has broken below the 200 230 moving average. Price is below the Ichimoku cloud, right? Am I confident that price would bounce, right? Everyone here is saying that it's a strong buy. I would think it's not a strong buy, right? I think price could go even further down. It would probably be a strong buy if price like went down further, right? Went down further to maybe like this level over here. So this is how you combine fundamentals and technicals together to fine tune your entry. So all the fundamental analysts, they're punching their calculators, they're thinking what is the best level to buy from, right? But you as a technical analyst, right, you're looking at their research and say, yeah, it's a strong buy. You expect it to go up to 4,000, blah, 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 right? But from my technical perspective, right, it is a shit time to buy because it broke out of a channel, right? It broke, is now below a big moving average that it has finally broken. The natural moving average I taught you guys is now below Ichimoku cloud, right? So we are gonna wait for price to come down and test this support area over here first, right? Maybe, right? You can see where a lot of price rejections are. We wait for prices to come down to here. Once it comes down to here, then maybe we look to get in and play the bounce, right, all the way up. So it's not only about getting playing, to a certain level, right, but it's also getting at a good level, right? Yeah, over long term, yeah, Junite, be very careful when you use the word it will. Price will not, can do anything that it wants, right? So yes, it will not necessarily go back up there. But if you're going to buy, it's always better to buy at the cheapest price. So that is the beauty of technical analysis. And that was what we did previously in our hedge when we were advising the trading desk. A lot of them, they had their analysts who were punching the calculators and like deciding the intrinsic value of a stock, undervalued, overvalued. But when it comes to deciding the entry, they were not able to do so. They know that ultimately price might go up, but if you bought over here and price went all the way down and then go up, you're losing a lot of money in between, right? So what we do with as technical analysts is that we pick the best entry. We can see that a lot of people are saying is going to buy. I think if you browse around a couple of other news, let me see. Nope. Google Finance doesn't really tell you. Let me go to the Wall Street Journal. Wall Street Journal, does it have any forecasts? I usually just like to look at the forecasts. Not really. Finviz, does it show you the forecast? Well, it does show you kinda, if anyone changed, but these are what most of people are kind of doing, right? But doesn't really have a big, really quick overview on the forecast. Let's take a look. Reuters doesn't work. Investing.com, I think investing.com does, right? Somewhere. Well, I don't tend to look at this summary over here because it just kind of uses moving averages, right? Which kind of sucks, right? So yeah, it's just using indicators. It's not really using real analysts, right? So let me see. Come on, investing.com, you gotta impress me a bit. I guess they have insights, but you got pay to get it or something. Analysts and opinions. Let me see. Nah, just some analyst opinions here. Not really anything they can look at, right? So I guess Yahoo is the one of the most comprehensive when it comes to when it comes to recommendations, right? So I think it got a recommendation trend. Yeah, stuff that you can look at over here. Pretty cool, right? Pretty cool. Yeah, trading view. Yeah, I wanted to show you guys trading view for Amazon, right? So one of watch not the details, right? So for Amazon, you can actually come in here, click by the site over here, and you can see like the details that TradingView has. Now TradingView have this thing here on buy and sell, right? It is on technicals too. It's on a few preset technical indicators and stuff, so it's not that accurate too, right? Technically, I'm more sell for it. So in some funny way, yeah, I more agree with TradingView than Yahoo, right? But this is from a technical perspective, right? But yeah, the great thing about TradingView is that it does show quite a lot of information, right? So you can click on more financials and you can actually see a lot of overview, right? You can see whether it's annually or quarterly, right? So if your trading strategy is not too stretched out into the future, right? You can look at quarterly. If you remember, you don't look at annual income statements and stuff if you want to trade for a couple of days, right? If you're holding it for a long term, then maybe look annual. To how I loaded it was when you're on any of the stocks, you click on this thing called watch list and details, right? And you can scroll down to the bottom and it says under here you got more financials. Click on this and you get all the financials. You got the overview, you got the income statement, right? So you can see all the different income statements. You really want to dive deep into it, you can see the PE ratio and stuff. You can see the balance sheet, the cash flow, and of course you can see the statistics, right? Number of employees, number of shareholders, right? All very, very useful information, right? The EBITDA, right? Yeah, you can yeah, you got PB ratio, price to earning ratio, the popular stuff you can see over here. The more you click on it, the more you select, you can actually see it up there, right? So yeah, this like for example PE ratio, quarterly PE ratio you can see over here. But yeah, this is what we say is the optimal holding period for share. For volatility, slightly trickier. I think I tend to be a bigger fan of at least holding trades for a couple of days to a week, right? Because that way, your holding cost is not too expensive, but also, right, the sweet spot is, probably a week to a couple of weeks, if you ask me, right? Because you get to benefit from the fundamental forecast. Like you can see over here, a lot of people are saying Amazon is a strong buy, right? But at the same time, our technicals are saying it's not such a strong buy. So once we get in on a good level, right, then we hold that on that for maybe like 1 month, right? Because these forecasts tend to be renewed on a month by month basis. You can see July, August. So yeah, it's pretty useful. It's pretty useful. Yeah. Yeah. It's true, man. Yeah, it's quite interesting. But yeah, I hope this session. I think in our future sessions, I'll be talking a little bit about sector rotation, very advanced approach to analyzing shares, which you can use, And my team is heading off. Bye. Right. Yeah. These advanced approaches to trading shares we can use. RRG, yes, relative rotation graph, Adam. That's correct. You combine these together, you don't get this kind of stuff when it comes to trading forex. It's a lot more advanced, but guys, I'm always trying to teach you guys how to take your trading to the next level. It's not always just about trading. Forex. Trading forex is great. My day-to-day, my weekly analysis will be a lot of it be focusing on forex. Maybe I have one focusing on shares. I will ask IC Markets about it, right? But yeah, it's the very nature of the very nature of trading profitably is that you must learn how to diversify your portfolio, right? And we actually, if you guys ever want to go to icmarkets.com, you will see something here. I think it's still there. You see one of our past webinars, right? Oh, by the way, if you're here for the first time, go to this upcoming thing. I'm going to send it to the chat, and please go sign up for tomorrow's webinar, right? We have a live analysis session, same time, same place tomorrow, right? So anyway, we had this thing here where I think it was a US election special, right? So you're watching on YouTube, right? I was actually blah 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 blah. Yeah, there is it. I think it's over here. Could be. This was the SPX. No, okay, I wasn't looking at SPX. There was one stock in particular I was looking at. Let's see if I can find it here for you guys. All right. Yeah, there you go. Can I change this to HD? All right. So you can see for Tesla, I did make a forecast for Tesla back then. This was in I think it was November 2020. Yeah, November 2020. We're making a forecast for it to go all the way to the 560 level, right? And this is for Tesla. Let's just see what happened for Tesla, all right, during that period of time. You can see I'm gonna remove this. I'm gonna remove everything. Blah 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 blah. So this November 2020 over here, yeah, November 2020, I was forecasting it to go all the way up to 550, and this was at a point where I think, what chart was I using? I think I was using, yeah, the 1-day chart. You can see this is Elliott wave structure. We're looking at 560, actually 580. I think we're looking at the 580 level, right? So we are going all the way up to even 580 over here, right? So this was the triangle I drew. This was the triangle I drew, right? And of course, my Elliott wave structure was something like, I think 1, 2. I know a lot of you guys are 1, 2, 3, A, B, C, D, E, right? 4, and probably 5 up to here, right? So this was when this was an example. This was actually the call that won us our best equity research, right? Yeah, Katie was, maybe Katie is copying me, man, right? But this was the call over here right before the US elections, right? And yeah, it was a pretty good call. Yeah, perhaps, Andre. Yeah, it's good stuff, right? So we made a couple of big calls over there. Some of it was on forex. Yeah, some of it was on forex, but the big one was on was using Elliott structure to kind of forecast the move in share prices. Yeah, I have tremendous respect for Katie Woods, right? So yeah, you can actually use Elliott structure on on that, right? Varish, I'll catch you tomorrow, no worries, right? So yeah, this was very useful idea on actually how we forecasted the move on Tesla, right? But anyway, right? This comes to the end of our session, right? Thanks for sending that through, Nick. I'm just gonna save this. I'm gonna send it to myself, right? I'm gonna paste it over here so I have it later, right? To kind of train my neck later. Thanks for sending it through. I will take a look at it. I think you sent a YouTube video, and I'm just gonna save the whole message to myself. Okay. Oh, sorry. Yeah. Yep. I'm gonna paste the whole thing over here, right, for myself. Okay. Now, guys, that's it for me, right? I just paste this whole thing here, so it's easier for me to keep track of. Okay. Yeah, that's it for me, right? Let me just pull this up over here. Yeah, that's it for me. I will catch you guys tomorrow, right? Thanks for RRG, Adam. There's actually a free site for RRG that you can take a look at, right? So go search for free RRG graphs. I think there are a couple of free sites that shows RRG graphs. So I will probably share a bit on it next week, or maybe a little bit on it tomorrow. But yeah, we're coming towards the end of our webinar. A lot of you guys are letting me know, right? I will thank you for sending that through, guys. Especially Nick. I will try to strengthen my neck on it. Thanks, Saida. Right. It's a good session today. Right, a good session today. Thanks for tuning in. Slightly different, but I do want to open your eyes to the possibilities of using shares to diversify. Right. It's really great stuff. Use shares to diversify your portfolio. Okay. Now, yeah, good stuff. Good stuff. I'll see you tomorrow, Yan Cheng. I see you tomorrow, Luis, Andre, Saida, right? Junaid. See you guys tomorrow. Ajay, Marco, Bleach, Lulian, Telmar. Yeah, thank you. Thank you. I'm glad you like it. Jasek, take care. Take care, man. I'll see you tomorrow. Biggest fan. Hamar, Doris, Mark. Take care, guys. Take care, guys. Yeah, lots of food for thought, Diane. Right? It's very, very in depth, right? Cheers, Adam. Cheers, Simon. Yeah, Simon. Edmund, Andre. You better don't do a survey today if you don't answer. Okay, I won't do a survey today. I'll see you guys tomorrow instead. Okay, that's it for me. I will see you guys tomorrow. Cheers. Trade safe, stay safe, and I'll see you tomorrow for our weekly market analysis. Right. Okay, Andre. I think if you want to find it, I think the question you were asking, Andre, was, uh, this is the free one I use. Free relative rotation graph, right? The first one, RRG online. Go sign up for it for free. Yeah, you should be able to get it. All right. Okay. Now, that was the question you're asking, right? I'm pretty sure that's the question you're asking. Okay. I gotta keep Andre happy. If not, it's gonna complain. Okay. Thank you, Mark. I'll see you. Right. Yeah. But using this itself would be enough. I use this. You can see that it's one of the links I've already saved. All right. That's it for me. Thank you so much, guys. See you. Cheers. Take care and peace out. Bye-bye.